Yo, 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 welcome. Today's video is going to be over August 12th to August 16th weekly market outlook. And yeah, let's get right into it. So for today's video schedule, I'm going to be going over the trades that I took last week. It'll be brief. And then I'm going to go right into the weekly market outlook. Alright, so starting with the very first trade this week, the trade I took this week on Monday was, is it this Monday? Whoops, wrong one, right here. August 5th, 2024, Monday. So this trade was based off of how we reacted to the 4-hour FEG here, and notice how this hourly closed. So based on this hourly candle's closure, I can anticipate for us to take out this hourly candle's low. And I understand why we created this, bearish power of 3-2. It was because we came into a 4-hour fair value gap, right? And notice how this 1-hour candle's low is also in alignment with the 30-minute low and the 15-minute low here. And on the 15-minute time frame, we had this 15-minute fair value gap, but I noted this 15-minute fair value gap as a 15-minute breakaway gap because I wasn't anticipating for prices to retrace back inside this candle's or this 15-minute candle's fair value gap. I wanted to see prices take out the 15-minute low first before we retrace for whatever. So on the lower time frames, there was a 5-minute fair value gap that ended up being my entry pattern. So like I said, I was anticipating for us to take out this 15-minute low first before retracing back into this 15-minute breakaway gap. And let's see what happens on a 1 minute. So we opened up at 1 o'clock, right? We retraced back inside this 5-minute fair value gap and we priced lower, but the thing I failed to notice in this trade was there was SMT that occurred. So whenever we came really close to this low on NQ, on ES we had already taken out that low. So whenever prices close here on this 1 minute time frame, what I should have done was actually recognize that there was SMT, and I should have moved my stop loss to this swing high so I can mitigate my risk. And because I didn't do that, I actually ended up getting fully stopped out. Which is okay. Like I said, before I even entered this trade, I was content with the outcome, but I could have mitigated my risk because if I just realized that there was SMT, I should have been able to mitigate risk. Second trade coming into this week was on Tuesday, August 6th, 2024. So this trade was based on how we closed at how we opened up at 10 o'clock. So notice how this 1-hour candle closed, right? This hourly candle close and this 30-minute candle closes suggests that we are probably going to take out this hourly high and 30-minute high. So there's time frame alignment here. And on the 15-minute time frame, notice this 15-minute candle right here. So this, look at my cursor, this one. So based on this 15-minute candle power of 3, I can anticipate for us to take out this 15-minute high and target the 30-minute high and 1-hour high. And we also closed above a 15-minute SIBI. So once we close above the SIBI, that suggests, hey, we're bearish. Since we closed above this 15-minute SIBI, we're bullish. But if we were bearish, we should have respected it and continued lower, not close above it. So those were my confluences for taking this trade. And let's see the entry model. So on the 5-minute time frame, we created a 5-minute fair value gap. And whenever prices retraces back inside that 5-minute fair value gap, I enter and I'm targeting the 15-minute high and the 30-minute and 1-hour high. The 30-minute and 1-hour high, they're the same, so there's time frame alignment there. And yeah, notice how we're also buying below the 10 o'clock open. So prices opens up at 10 o'clock. We trade lower, tap into the 5-minute fair value gap, and then we take out 15-minute high and 30-minute high. And then, you can take the standard deviation from this leg down into that 5-minute fair value gap to get standard deviation projections. And the third trade that I took this week was actually during the PM session of Tuesday. So this trade was based on how we closed again. Like I said, pay attention to how we closed on the 30-minute, the 1 hour, and the 15-minute, right? And on the 15-minute time frame, you can see it a little bit clearer, but we traded into a 15-minute fair value gap, right? And we displaced lower, we traded higher. So that means I know the reason why we created the bullish power of 3. We created the bullish power of 3 because we retraced into a bullish fair value gap. On the 5-minute time frame, which is usually, so the sub 5-minute time frames or the time frames I like to use for my entry patterns. So on the 5-minute time frame, there's a 5-minute fair value gap that supports the idea of us taking out the 15-minute, the 30-minute, and the 1 hour high. And let's see on the 1 minute here. So on the 1 minute, you can see it a little bit clearer, but we open up at 1 p.m., right? We dip into the 5-minute fair value gap, and that actually was my entry. So we dip into the 5-minute fair value gap, and we take out the 15-minute, the 30-minute, and the 1 hour high. The reason why I say the 15, 30-minute, and 1 hour is because, like I said before, there's time frame alignment between those 3 time frames. Those 3 time frames have the same objective. And let's get into the 4th trade. So like I said, these recaps are going to be really brief. I have like a longer, thorough analysis on my YouTube channel over every single one of these trades this past week, but just in this video, it's just going to be really brief. So I believe we're on the 4th trade. So the 4th trade was actually on Wednesday, August 7th. So this trade was based on how we reacted to the daily fair value gap and how we reacted to the coming into the premium of this, daily dealing range. So after we tap into this daily fair value gap, right, and we tapped into the premium of the price range, we started getting movement lower, and you can see it a lot clearer on the 15-minute time frame. So whenever prices, traded lower, I wasn't given an opportunity to get into that move until the PM session. So like I said, all I did during that New York AM lunch session was just watch prices because there was no entry model. But here, like you can, as you can see, we do get an entry model. So prices creates this 15-minute fair value gap, right? And I don't enter right at that 15-minute fair value gap. I tend to wait until I want to see how we react to that 15-minute fair value gap. And the way I wait for the reaction is I wait for the next 15-minute candle's closure after tapping into the 15-minute fair value gap. So, the things that's going in my head is, hey, are we going to create a bearish power of 3 or a bullish power of 3? Like, what if we close above this 15-minute fair value gap? Then I would have gotten stopped out because I didn't wait for the reaction. I wasn't a observer of price. So one thing I do want to note here too is note how we closed here on this 30-minute candle. Based on this 30-minute power of 3, I can anticipate for us to take out that 30-minute low. So there's time frame alignment here with this trade. Let's go on to the lower time frames to see the entry model. So on the 3-minute time frame, there was a 3-minute fair value gap, which ends up being my entry, the way I enter this trade. So like I said, I wait to see a reaction to the 15-minute fair value gap. After we created a 3-minute fair value gap and the bearish 15-minute power of 3, that shows me, hey, we did have a reaction. We displaced lower away from a key level, and being able to enter off of a 3-minute fair value gap, mitigates the risk. So let's say you were to take this trade on the 15-minute time frame, right? Your stop loss would have been like up here somewhere, probably up here, right? And that stop loss would have been maybe like a 50-point stop loss. But if you were trading the lower time frame models, you can actually mitigate your stop loss, and it's just a lot better risk management. So like I said, if you were to take the model on the 15-minute time frame, it would have been a 50-point stop loss or something like that. But if you take it on the 3-minute time frame, it's actually a 23-point stop loss. You see the difference? It's prices is fractal. Depending on how you like to trade, some swing traders or whatever would have taken maybe the 15-minute fair value gap. But I'm a scalper, so I like staying on the lower time frames. And notice how the prices are like they're so fractal, right? So notice how there's a model here on its own on the daily time frame. You could have shorted at this daily fair value gap, but like I said, are you willing to risk like 200 points trading the daily model, or would you like to risk 20 points trading the internal model? It just varies. It depends on what type of trader you are. But me personally, I like trading internal models because I'm an intraday scalper. And if you were a pattern trader or whatever, this you can see there's a high, a low, or a high, and then a lower low right here. So these last two down close candles could have been seen as a breaker, but I don't necessarily trade using breakers or order blocks. I'm simply open, high, low, close, power of 3, and fair value gaps. And fair value gaps for me are just like ways I can enter, and it's just I'm straying off path here. Let's just get back to the recaps. So like I said, I noted at the 3-minute fair value gap. So that 3-minute fair value gap actually ends up being my entry model, and when prices retraces back into that 3-minute fair value gap at 145, I take my entry. I'm targeting the 15-minute low, and I'm targeting this 30-minute low as well. So this is the 30-minute candle right here. And Thursday was an Asian trade. I didn't take this trade, but as I was back testing the Asian session, the London session, I noticed that there was a A+ setup. And this trade was based on how, so on Wednesday we had that really, we had that displacement away from the daily fair value gap, right? So coming into the Asian session, I wanted to see, hey, are we going to consolidate, or will we have a continuation of the move yesterday? So whenever prices retraces back into this 4-hour fair value gap, I told myself, okay, I'm gonna wait and see what we're gonna do there, and I'm not gonna be trading any longs because we are in a bearish PD array, right? So on the 15-minute time frame, notice how we create this 15-minute SIBI within a 4-hour SIBI. So the 15-minute is now having a reaction to the 4-hour time frame. I know a lot of traders, they're on the 1-minute time frame, right? And they're like, oh, I just got a fair value gap that got created whenever we tapped into a 4-hour SIBI. I understand that prices are fractal, but you have to be relative. You have to understand that the 1-minute doesn't naturally correlate with the 4-hour structure, if that makes sense. Like, you can't go from 1-minute to 4-hour objective. You have to stack the time frames. Like, you have to go from maybe you can go from 15-minute to 1 hour to 4 hour. You can't go from 1 minute to straight to the 4 hour, or you can't go from the 1 minute straight to the monthly. There's no correlation. Like, you cannot target a monthly objective strictly based off of 1-minute structure. That's just just think about it. It's not relative to each other. So I usually wait for like a reaction. If I'm in a 4-hour PD array, I tend to wait for an hourly reaction to it, or maybe even like a 15-minute reaction. And on here, we created, like I said before, we created a 15-minute SIBI when we are trading within a 4-hour fair value gap. So I noticed, okay, we created that 15-minute fair value gap, and what are we gonna do once we retrace back inside this 15-minute fair value gap? I don't trade that initial retrace into that 15-minute fair value gap. That's not the model I trade. I don't trade that 15-minute fair value gap. I wait to see if we can get another reaction to the 15-minute fair value gap, right? So whenever we had this, 15-minute bearish power of 3, that's when I was like, okay, we just now have another reaction to, we just had a reaction to the 15-minute fair value gap. So now I'm going to go on to the lower time frames to target that 15-minute power of 3's low. So on the 2-minute time frame, there is a fair value gap, and that actually ends up being my entry pattern. And you can see a little bit clearer on the 1 minute, but we open up at basically 12:30. We retrace into the 2-minute fair value gap. I take my entry and I'm targeting the 15-minute low and 30-minute low. And damn, boom, bam, that's my trade. And my very last trade was on Friday. This trade was this is a plus setup, but we're not really necessarily trading with the higher time frame narrative here. What I had in mind coming into this morning on Friday was we disrespected the bearish PD arrays created on Wednesday, and we created bullish PD arrays on the 4-hour, 6-hour, 8-hour. So we completely disrespected what happened on Wednesday during the PM session, and we created a displacement higher. So Friday I was thinking, okay, we could either have a continuation or a consolidation. And based on just looking at what the charts did here, we are in consolidation. Whenever we retraced back inside this 4-hour fair value gap, we didn't have a strong, there's no urgency for prices to price higher. We're just kind of like meandering around. So with that in mind, I'm understanding, okay, we're in consolidation, so I'm not going to be shooting for the stars, right? I'm going to be shooting for only the internal models, internal highs and lows. So on the 15-minute time frame here, notice how we had this 15-minute bearish power of 3, right? And not only do we have a 15-minute bearish power of 3, I understand the reason why we created that bearish power of 3. We just traded back into a 15-minute and 30-minute fair value gap, right? So reaction to this 30-minute fair value gap. And if you actually take this gap here and bring it all the way to the right side and take the consequent encroachment of it, this 30-minute candle, its high is 1 point short of the consequent encroachment. That's algorithmic signature. So that to me, I'm like, okay, we're bearish. And some other confluence is that is 15-minute, 30-minute, and 1 hour. We all have the same objective. So there's time frame alignment. On the 15-minute time frame, we also closed below a 15-minute BISI. So we're disrespecting bullish PD arrays. So that means we're most likely going to continue lower. So I have my model in play. I'm targeting that 15-minute low, which is also in line with the 30-minute and 1 hour low. So on the lower time frames, I'm trying to find the entry model or the entry pattern. On the 3-minute time frame, we have a 3-minute fair value gap. So I take my entry at the 3-minute fair value gap, and I'm targeting the 15-minute, the 30-minute, and the 1 hour low. And you can see it a little bit clear here, but all my objectives got taken, and that was my very last trade for this week. This week, I would give it my performance was probably like an A-. All my setups that I did take were actually A+ setups, but the reason why I wouldn't give myself an A+ rating here is because there were some setups where I saw I was going to execute on, but I had technical issues where the platform that I trade on wasn't linked, or my account wasn't linked to TradingView, and it just caused me to miss out on some trades, which kind of sucks. But yeah, coming into next week, I'm for sure gonna have all of my mistakes, mishaps corrected. And yeah, so let's get into the actual reason why I created this video. That was a 20-minute recap. I'm sorry, I try to keep it brief, but hopefully, you guys found some meaning to that recap. All right, so first things first, I do want to take a look at the economic calendar. Oops. So on the economic calendar, some of the news that I do want to note out is CPI and PPI. So those are two major news events coming into this week. We have PPI on Tuesday and we have CPI on Wednesday. So expect the high of the week or low of the week to be created Tuesday or Wednesday. For me, I'll probably most likely select Tuesday to be a high of the week. And maybe CPI will be, the expansion day. And PPI could be the manipulation. So yeah, that is my little economic review, I guess. So it's PPI and CPI. First market that I do want to take a look at is the Dixie, the dollar. So I'll always start my analysis on the dollar, because the dollars I don't trade the dollar. I use it more as an indicator to see, okay, are we going to continue, lower on the indices or higher. The Dixie should be trading inversely to the dollar. So if the indices should be trading inversely to the dollar. So if the dollar is going higher, the indices should be going lower, and vice versa. So what I have in plan for the dollar is, based on this weekly candle here, I can anticipate for us to take out the previous week's high. So I want to see prices take out previous week's high and retrace back inside this weekly fair value gap that we created. And yeah, that's what I want to see here. I'm not really too much. I don't know what we're gonna do on Monday, Tuesday, but like I said, my objective for this week is simply probably just going to be previous week's high. And if we don't take out previous week's high, and all we do is trade into this daily fair value gap, then that's completely fine too. But yeah, I'd like to see us take out previous week's high, and however we treat this weekly fair value gap doesn't really matter to me, because I can trade the intraday models. So let's say we get a daily closure above this weekly fair value gap. That would probably most likely suggest that we are going to continue higher and maybe retrace back inside this weekly SIBI. And yeah, let's see what I do have on my thing. So dollar, we have respected a weekly SIBI. So we respected this weekly SIBI right here, and we traded lower. We displaced lower, and we created a daily fair value gap and another weekly fair value gap. Overall, I am bearish on the dollar. However, I would watch intraday price action to see if we could retrace back into the weekly fair value gap. And what I mean is this weekly fair value gap here, this one. I want to see if we can respect it, and if we do respect it, that means we are that will confirm the bearish bias on the dollar. So I am anticipating for the weekly objective to be previous week's high, and after we take that out, I would trade intraday models on the dollar. Coming into NQ, we have the same situation too. So we created this weekly fair value gap on NQ, right? So now I'm thinking, based on this weekly power of 3, based on how we closed on the weekly time frame, I can anticipate for us to take out this weekly high and have a retracement back inside this weekly fair value gap. And let's see on the not 10 minute, but 10 hour, we have this 10-hour BISI that we retraced back into. So coming into on Monday, I want to see us take out previous week's high and from there is really just up to prices if we continue lower or if we completely disrespect this weekly fair value gap. So NQ, we created a bullish weekly power of 3. Based on how we closed on the weekly time frame, I can anticipate for prices to take out the weekly high. I would trade intraday models after we take out the previous week's high. And we also, we created a weekly fair value gap. So depending on how we react to that will determine if we stay bearish or not. I am anticipating the weekly objective to be previous week's high and Monday's objective to be previous day high. So let's take a look at the 4 hour. So on Monday, I do want to see us take out Friday's high of day and have a retracement back inside this weekly fair value gap. And like I said, once we tap into this weekly fair value gap, I don't really care what we do. I'm just going to wait and see how the daily candle closes after trading back into it. If we have, a bearish closure and we do something like this on the daily time frame, then I'll be shorting and probably targeting a previous week's low. But if we get a complete disrespect to the weekly fair value gap, then I'll be longing. Simple as that. And on ES, basically the same thing on ES too as NQ. So ES, we created a weekly SIBI, and I'm anticipating here, based on the weekly power of 3, I can anticipate for us to take out the previous week's high. So like I said, it's the exact same expectations for ES as NQ. After we take out previous week's high, I would just sit on the sidelines and just watch prices. Are we going to have a daily reaction to the weekly fair value gap? If we don't, then I'll continue to long. If we have a respect to the weekly fair value gap, then I'll short. And that's going to be probably all for the weekly market outlook. One thing I do want to note is that we do have CPI and PPI this week. So anticipate an expansion of the monthly candle. So look at the monthly candle here. So we could either continue lower here on the monthly candle, or upright have a market reversal and trade higher. So CPI will tell us what we would, what we're gonna do here on the monthly candle. And yeah, I don't know if there's anything else I do want to mention in this video, but please join my Discord. If you guys want to join it, I have the link in my bio. I do intraday analysis there on my Discord. I get on calls with people. If you guys need any help, then I'll be on the Discord. It's just a lot easier to reach me through Discord than YouTube. I don't really check YouTube comments or that often as I do on my Discord. And not only is it a trading Discord, but it's also a self-improvement, self-growth, that type of deal Discord as well. So I post daily motivational quotes. My members on here, we post like just deep thoughts that we might have about life, just growth in general. And we also do like little book reviews. So the book reviews that I'm doing right now for myself here is Meditations and Maximum Achievement. I've already completed Meditations, but I'm just going over Meditations again and putting out all the key points from this book that I read onto Discord for everybody to see. And I'm currently reading Maximum Achievement. So every single chapter that I finish, I just do a short rundown of it, and then I post all the key points on to Discord. So make sure to check out the Discord. If you guys are still here, then please check it out. And thank you guys so much for watching. I'll catch you guys later in the next one. Peace out. Bye.